There you go. Okay, so the platform I'm using is Thinkorswim. Why am I not using Robinhood? Why don't you use Robinhood? Well, because I'm pretty sure you guys can answer that question, right? The thing is, here's the thing, okay? There are people, for example, I don't know if all of you in here are in Boiler Room or in my chat or whatever, but at one point in time, you probably paid for a service, right? Now, if you're paying for a service, usually I'm going to say 50, 60, 70% of people who pay for a service, the reason why they pay for that service is so they don't have to do it themselves. That's, to be honest, am I right? You pay us so we can do it for you, right? But what I try to convince people is at the same time, I won't be here every day to do this, right? Neither do Brett. So it's like, I'd rather have people learn by themselves. Because this is the thing. This is like this fucking career, this craft or whatever you want to call it that we do every single day, right? I'm not gonna lie, it's hard. And here's the thing, regardless of the fact that you pay for what I say or whatever, it's not fucking easy, right? And I want you to know that it's not easy. I want you to know that it's not easy, and that like sometimes it's out of our control. Like it's out of my control. It's out of like sometimes I'll call things out and it doesn't go. So it's like, here, I'll turn the chat off. Sometimes I call things out and it doesn't hit. And it's like sometimes I get blamed for it or whatever. I don't care at this point, right? I've done this for like 3 years. I don't care at this point, but it's like this. You should know how to do this by yourself so that you can wake up in the morning, even if you're still subscribed or whatever, you can see what we're looking at, and then you can understand it the way we understand it, right? So that it's better for you, because I'd rather have you guys learn this by yourself, and so that you can wake up in the morning and rely on yourself, to make plays, things like that, because it's more gratifying, right? It's more gratifying when you understand this yourself. It's more gratifying when you can do this by yourself. Like, how many of you, right? Be honest. How many of you, and I'm going to turn the chat back on. How many of you wake up in the morning and already kind of know what to do and have made trades for yourself? And then how many of you feel good when your trade goes right and you're like, damn, all this time that I spent losing money, all this time I spent learning, it's fucking paying off, right? So that's the thing, right? So sometimes, I mean, shit, sometimes you're going to be wrong. And here's the thing. There's 2,000 people here right now, right? And I'm going to be honest. So I'm going to show you all the same exact fucking strategy, right? I'm going to show you the same exact strategy. But I'm going to tell you this. I bet you only 400 or 500 people will take it and be profitable, and the rest won't be. Why is that? Because there's more to trading than just the charts, right? Everyone, there's 2,000 people here, right? Whatever, however many people. That's 2,000 different emotions, 2,000 different trains of thoughts, 2,000 different ways of thinking, right? So everyone here is different emotionally. You guys handle your trading differently than everyone else in here, right? For example, how many of you are in the Telegram? And how many of you saw the signals that were made today? You guys saw that 8 of them that I made are fucking green, right? But I know for a fact, some people didn't take their profits on some of them. I know for a fact, some people, for example, the first cat that I made, it moved a little fast, but how many of you got in that one? It ended up being a 90% trade. Right. And then what was the next one? Let me go through because I'm gonna go through every single trade that I took today, that all of them, even the red ones, and I'm gonna show you guys how I made them. Like, for example, okay, so cat, first was cat, then it was Tesla. How many of you guys got over 50% on Tesla? Tesla was nuts, right? And then after Tesla, what was Tesla? What was after Tesla? D-Dog. Now D-Dog moved from 205 to about $2.40, right? A little 20% return, whatever. Now here's the thing, and I'm gonna be honest here. Here's the thing, right? Now, sometimes, right? Sometimes you guys need to know when to take your profits. Okay. I'm not showing you, I'm only showing you the whiteboard right now. Can you guys see the whiteboard? Okay, so sometimes you guys need to learn when to take your profits. And the way I take my profits is, I'm gonna use the whiteboard right now. So with me, right? And this won't go for everyone, but I always, fuck, why is it capped? I always buy more than one contract. Now, what if I can't afford more than one? Now, here's the thing. There's too many what ifs. Too many what ifs. If you can't buy more than one, then don't buy it. Well, what if my account? What if I have $100 in there? What if I only have $200 in there? What do you want me to say? You know, what do you want me to say? Like, there are, you know, like, what do you want me to say? Right? So it's like, you need, here's the thing, this game, and I'm going to be honest, you need to get your money up for this game first, right? You need to get your money up. You need to be able to have money to play with, but that money has to also be, what's the word? Expendable, right? So the money that you put in has to be expendable, right? Not necessarily fuck you money, but the thing is, no one wants to lose money. No one wants to lose money, okay? Now, if I say my money is expendable, it means that if I lose it, I can replace it without having to stress out about it. Does that make sense? That's the answer. But obviously, you don't want to lose money. It's just so that in the back of your head, it makes you feel better. That's the part I'm talking about. You know, so you can feel better about trading it. Now, I always buy more than one contract because I want to get the most out of the move. And how you do that? You do this by trimming. Trimming equals taking profits along the way. Whether it be you're buying puts, whether it be on the way down or whether it be on the way up, doesn't matter. Now, what if, for example, like for example, today, like Tesla and Amazon, right? I signaled a Tesla call and an Amazon put, I think, right? So with Amazon, right? If Amazon costs $20 per contract, how much is that? So that means it's 2K per contract. Okay, if it's 2K per contract, and then you're listening to Kevin, and he's like, he's telling you he's always buying more than one. If you're buying Amazon, what should your account be at? Okay, now what kind of rule do we go by though? How many percent of your account should you use? If we use the 5% rule, meaning only risk, no, not risk, hold on. Only use 5% of your account per trade. That means if you're buying a $2,000 contract, your account has to be what minimum? You guys are throwing some crazy fucking numbers out there. This means your account should be what? What's 5%? If 2K is 5%, what is 100%? If you want to play Amazon. Now, that statement is probably going to crush a lot of your hopes and fucking dreams right now. Is it? Yeah, it is. It is 40,000. Okay, but here's the thing, right? And I'm here to tell you some good news. Okay, now I'm here to tell you some good news. So if you spend $2,000 on a contract, right? And here's the good news: if you spend $2,000 per contract with 15% stop loss, what is 15% of 2,000? Well, let me get the calculator. So what do I mean by this? And what do I mean by this? And this is some good news. This means you're not risking 2,000 fucking dollars. You're only risking $300. Does that make sense? So is it okay to have a 10K account and still trade Amazon? Right? That's the right answer. I'm asking for it. Right? Because why is that? I can't tell you yes because I don't know if you're a fucking, I don't know if you're gonna do some dumb shit and be like and go degen mode, right? It's here's the thing. If you have less and you're gonna you have to be disciplined enough to be able to follow your rules. That's it. You can't just be like, fuck it, dude, I'm gonna hold this trade. Does that make sense? So yes, it's okay to get in Amazon with like a $10,000 account because essentially if you do a 15% stop loss, you're only risking 300. But if you're the type of person that gets into a trade and then the trade goes wrong and then you're just like, bro, is it going to go back up? Is it going to go back up? Like you're over here like fidgeting and shit. Like, no, it's not good, right? It just depends. And I'm going to tell you this. It takes a lot of practice to be disciplined. Some of you guys are laughing right now, but you just freaking, you've been through this. Some of you laughing are the ones that probably let their trade go bad. So it takes a little discipline. So here's the thing. So if you have a $10,000 account, should you be trading Amazon? Yes or no? To be honest, no, not really. Unless you're really disciplined. That's it. But that's besides the fact because there are so many different stocks that you can trade, right? There's so many different names that you can trade. There are so many. I cannot type. Different trades. Say you don't have to be stuck on the big names. You don't have to be stuck on the big names. You don't have to be like, bro, I want to trade Amazon today. Man, sometimes I want to strangle people because like you can just trade Apple, bro. You can just trade SPY. Everything moves. Don't be stuck because here's the thing, right? Why? And here's a question. Why are people so attracted to these big names? No one talks about this shit ever. No one tries to teach you about shit like this. They pay more. It looks like they pay more. That's the thing. It looks like they pay more. Because you're like, damn, bro, Amazon went up. Amazon went up $50 today. Amazon went up $70 today. Now, here's the thing. If Amazon is at $3,000 and it went up $70 today, how many percent is that? 1%, right? But if Apple, right? If Apple goes from 200 and it goes up $15, is that not the same thing? That's what you got to look at. That's all that matters. Okay? Like for example, cat today. right? Cat from 221, we traded all the way to 225. That's a $4 move on a $200 stock. How many percent is that? A $4 move on cat was 100% trade. How many percent of the stock did it move? It went up 2%, and it only went up $4. But then you have people looking at Amazon. They're like, bro, Amazon's up $20 today. Well, dummy, $20 isn't even 1% of Amazon. Does that make sense? Okay, now that I got that out of the way, right? So make sure you use the money you use, make sure it's expendable, right? Make sure it's expendable. Make sure that you're willing to risk it. Make sure that you have, you develop some type of discipline for it. Okay. All right. That's it. Class is over. Just kidding. All right. Let's move on. How many of you would have been pissed off if that was it? Someone was like, dude, I left the gym for this. I was looking like the Greek god in the mirror, but then I had to go leave for this. Okay. Anything, who's new? Because I don't want to just jump into something. I'm the type to make sure everyone here knows this shit. Okay. So the platform that we use is Thinkorswim, right? So Thinkorswim looks like this. Okay, this is Thinkorswim. This is what it looks like. Yeah, monitor, trade, analyze, scan, market watch charts, whatever. Boom. Right now, if you want to add indicators to this, right? When you're using indicators, you have to go over here, right? Studies, and you add it. Now, I'm going to tell you the indicators that I use. And don't be telling everybody my shit. Okay, so indicators. And here's the thing, I've been using the same. How many of you have been following me for years? Like, I've been using the same indicators for like 2-3 years. And like, I see a bunch of fucking people with this shit now. Everyone uses this. Hey, but no one wants to freaking think daddy. So moving average, I use exponential moving averages. Now, there are exponential moving averages and there are simple moving averages. Why am I using an exponential moving average as opposed to a simple moving average? Okay. Anyone know what moving averages are to begin with? And by the way, make sure you guys get some fucking popcorn or something because we're gonna be here for a while. I'm gonna like do some crazy shit today. What does the moving average do? It basically tracks the price of the stock, right, over time, right? It tracks it and it gets an average of how it moves, right? It gets an average of how it moves. It's weighted, right? There are SMAs and there are EMAs, right? Now, the EMA came out after the SMA, and the EMA was designed to improve on the idea of an SMA by giving. So here's the thing. You have exponential and you have simple. Which one came out first? What I just said. The SMA came out first, right? So the EMA, right, was designed to improve on the idea of an SMA by giving more weight to the most recent price data. Why? Why did this happen? Why did they do this? Why was the EMA created? Because if you're looking at the most recent price data, it's going to be more relevant than older data because the SMA is super slow. Okay, it's super slow. It's older data, right? Now, exponential is more sensitive to the price. Now, here's the thing. right? All indicators are lagging to begin with. So do I want to use one that reacts faster to the price or one that reacts even slower to the price if they're both already lagging? So I'm going to use the one that's faster, right? I'm going to use the EMA. So I use the, hold on, 9 EMA or 8 EMA. And then I use the 21 EMA. I use a 9 or 8 EMA and I combine it with the 21 EMA. Why are they jealous of you and call you Twitter trader? Twitter trader, bro. Who the hell calls me a Twitter trader? I've probably only been on Twitter for like 2 months and they want to call me a Twitter trader. Must not know who the fuck. Anyways, yeah, what does that even mean? 9 EMA or 8 EMA, right? So here's the thing. How do you get these numbers? Why can't we use a 4? Why can't we use 2? Like, why can't I use 1 EMA? Why can't I use 6 EMA? Why can't I use 7 EMA? Right? Now, how many of you know the answer to this? Why is, so like, how many of you have seen people use like a 4 EMA? No, I never, right? Exactly. See the answer? You guys are already answering the question. It's first of all, it's the data, right? It's the data. And it's like the 9 and the 8 are very common now. Like, you can try using the 3, 4, 5, 6, 7, or like 11, 12, 13, 14. You're going to see which one reacts to the price better, right? I use a 9 and I use a 21 on every single time frame, right? That's my exponential moving average that I use. Now, as far as my other indicator goes, right? The only other one I use is called a stochastic. Now, how many of you have used an RSI before? So there are two differences. I mean, there's a difference between an RSI and there's a difference between the stochastics, right? They both look the same though in terms of like how they look. So with the stochastics, right, you have, you have a flat line on top and you have a flat line on the bottom, right? And then you have 2 lines in the middle. Okay, you have 2 lines in the middle. With RSI, is there 1 or 2? There's only 1 with an RSI, right? And with the stochastics, it'll look like this. Okay, now for stochastics, right? If it's down here and it's going up, this means to me that the momentum is building up. Okay, this means that the momentum is building up. If it's already up here and it's coming down, this means that the momentum is slowing down and it's, we're jumping into a bearish, we're jumping into the bearish momentum, whatever, right? So with the stochastics, how do I trade these lines, right? It's kind of confusing. How do I trade these lines at the end of the day? So what I do is I trade when they cross over. Now, do I just trade the crossovers? No. What I do is I have a systematic approach to my trading, right? What does systematic mean? What does it mean when you have a systematic approach to something? So I have a systematic approach to my trading, right? First, there's like an ABC. ABC rule. So, you know, A has to happen, then B has to happen, then C has to happen, and then, and only then will I enter the trade. Okay. Now, when I signal stuff, here's the thing. There are different ways to trade, right? I'm only going to show you one way today, right? There are different ways. There are different methods, whatever, right? I'm going to show you, Jesus, I'm going to show you how I made those call outs today. And, you know, for those of you, how many of you made money off of it today and don't even know why the fuck you made money off of it today? Okay. So for those of you that don't know why you made the money today, I'm going to show you how and why. You said Tesla go up and it did. No. Okay. Now let's go to the charts, right? I'm not going to go over the whole support and resistance thing because if you don't know what that is, then I'm sorry. That's too much to do that like right now. Let me go over from the beginning. Cat. Oh, right here, cat. Okay, so cat. So let's look at cat, right? Let's look at the hourly time frame of cat. So cat on the hourly, right? This is the hourly time frame. This is why you need to be able to spot different patterns, right? This was the pattern on cat today. Whatever, you can make it like that, right? Essentially, what it's doing is it's creating a pattern and is breaking out of the pattern. That's one thing. That's one thing, right? On one time frame, that's what you can see. Now, do you just stop there? No, you don't stop there. You just look at the different time frames and see what's happening, right? Now, on the 15-minute time frame, right here, right? This is my oval. Now, what does this oval line represent? Now, what you have is you have a resistance right here. Now, this happened on what day? This is Monday, right? This is Monday. You guys see my screen? So on Monday, we created these highs. So you have one here, and you have one there, and then you have one here, right? 1, 2, 3, right? So what I do is, right, I looked at these two highs right here. Now, these two highs from 221.35 to 221.92. Here, let me delete the comments. From 221.35 to 221.92, right? You have this small gap, right? So what did I do? So I looked at it like this. So yesterday we had a lot of buying pressure come in, right? And on the 15 minutes, right? On the 15 minutes, we had a crossover on the moving averages right here, right? We created a low day, boom, whatever, this happened. Now, what entry did I use? I used not yesterday's, but Monday's end of day high as my entry. Now, can anyone tell me why I used this as my entry, right? Around after this and not this? It's simple because we opened up above it, this one, right? We opened up above this one. It's that simple. Okay. We already passed it gapped up, right? But why didn't I trade the potential gap down? Right? That's what people are wondering. Because remember, guess what happened in the morning? What happened in the morning? Everything was doing what? SPY was doing bearish. SPY was bearish as hell in the morning, right? Now, the cat was the only one that held the support at the open. Okay. Now, on the 5-minute time frame, if you zoom in, right? We opened up and look, we went past where the pattern is. Does that make sense? So when we opened up above the pattern, so that was one of the reasons why I signaled the trade, and because we're above yesterday's high. Remember, this is the high yesterday, right? Why was this the high yesterday? Because we opened up right here and we couldn't get back up it, right? And we opened up above the previous day's end of day resistance. So this is the end of day resistance from Monday, right? We entered around here. And where did we sell? Anyone can take a guess where we sold? I'm going to make the line right now. We sold about here. Why did we sell here? Because this was the resistance that it had, right? Yeah, it happened in about 7 minutes. So that was the space I had, right? So that was my reward. That was my reward. And then if you look at it like this, that was my risk. So risk to reward. Make sense? That was my stop loss. As soon as if it was to try to fill the gap back down, then I would have stopped out of my trade. That's why that's my stop loss. That's my risk and that's my reward. So essentially I was risking one to make how many? It's like a 1 to 3, 1 to 4 risk to reward, right? Is that a good trade to take? Yes, it is. Now, how, and here's the magic question. Hey, Kev, how did you know to trade this today out of all the fucking stocks out there? The answer is simple. I don't scan for shit. The thing is, with my monitors, I have 16 different stocks up. Now, here's a way for you guys to find trades, right? Now, going back to the whiteboard, and this is going to be some gold right over here. Now, how many sectors does the stock market have? Now, what sector do we look at the most? We tend to focus on that's what we thought. That's what's wrong, right? Everyone just tries to focus on tech. Now, if I have 16 different charts up, am I gonna have just the tech sector up? No, right? So what I try to do is I try to take at least, and here's the thing, you don't need to have all 11 sectors up there, right? You just need to have the ones that are in correlation to today's price action and to today's news. Does that make sense? What sector is CAT in? Caterpillar. What sector is that? Industrial. Am I right? Now, with everything else that's going on in the world, is having the industrial sector up on your chart a good thing to do? Yeah, right? So here's the thing, because of what's going on, whatever. So I have 16 different charts up, and then I'll have 3, like for example, this is how I had it right now. Let me look. So I have Amazon, Tesla, Apple, SPY, Microsoft, UNH, PayPal, CAT, AMD. I can't show you it because it's on my desktop. Three, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Can you get the last 2? Guess the last 2. Boeing and so boom. How many sectors did I just cover on 16 different fucking screens, on 16 different charts? And here's the thing, on Thinkorswim, it lets you, you can have like, even on your laptop, you can have like 8 charts up. You guys know that? So this is what I had on the screen. I switch it up every single day. I switch it up. I always switch it up. Now, do I switch up Amazon and do I like rotate them? I don't rotate Amazon, Tesla, like this one. Okay, look, I'm gonna make a check mark to the ones that stays. That's all that stays. I never switch these out. These I rotate. Now, how do you know when to rotate what, right? How do I know when to rotate? Like, for example, oh, what if you rotated AMD today and instead AMD went up? Well, at that point, then like, fuck, it is what it is, right? But what I try to look for is, right, and this is another piece of gold. So what I try to look for is, I look for 4-hour or daily potential breakouts. Now, I'm not gonna lie, there is a fucking ritual that you have to do like every night. What is the ritual that you do every night? Every single night, what I usually do is like I get on my chart for like an hour, right? At this point, like I'll only spend an hour, right? And then I'll look at all the different names from these different sectors. Now, here's the thing, how many stocks are there out there? There are so fucking many, right? There's so many, but essentially there are only 50 or 40 tradable option stocks. Does that make sense? There are only like a certain amount of tradable stocks because we trade options. Remember, there are only a certain amount of stocks that are tradable to us. Why? Because we have to look for the ones that provide enough liquidity, volume, open interest. Make sense? Like I can't just search up XYZ and expect to trade options on it because some stocks don't even have options to trade. So essentially, right, what I want you guys to do is go to this website. I'm going to give you guys a website for you to look at so that you know what stocks to look at. So you go to barchart.com. Okay. Now, if you go to barchart.com, you guys want me to go on the website with you, or can you do it yourself, or should I show you? All right, I'll show you. You guys see my screen? This is bar chart. Okay. Now, what you can do is, right, you can go to options right here. Now, you can look to see which ones are the most active, which ones have unusual options volume, which one has the most percent change in volatility, which ones are the leaders in volume, and you can see the IV rank and IV percentile. Now, what I look at is usually unusual options activity, right? That's one thing I'll look at, unusual options activity. So I'll go through this, right? And then I'll look at unusual options volume. But some of these names, if they're not names that you're familiar with, like if they're names that are like $2, $3, and like, bro, it's like sometimes these are, you know, these can even be pumps and dumps. Like, you know, like their options are jacked. So you don't want to, you know, you don't want to get into something that's already jacked up by 1,000%, right? Change in open interest, you can look at that too. And then what you can do is you can go to stocks, right? And which one of these do you think I look at? you can look at volume leaders. If you look at volume leaders, now here's the thing. Not all of these names have options, right? Not all these names have options, but if you look at market momentum or top 100 stocks, right, you can get a better idea. And if you filter it the correct way, you can get a better idea of, you don't even need to make an account. You don't even make an account for the site. I just go through this. So like, most active options. Look, most active options. Now, why are these names the most active options? Because this is what everyone trades, right? Everyone trades these names, right? These are names that you are familiar with, okay? And you can go buy these names. Like, you can not go buy them, but you can go buy these names, like BY, right? So, boom. That's easy, whatever. Now, right? Bottom line is, you should only have a basket. You should only have a basket of 20, 25 names to trade with. And you should rotate those names every day. 25, 30 names, right? Now, what was the next play that I made? That was a banger. Tesla. Now, here's where it gets kind of complicated. Okay. If you're looking at the 15-minute chart, why did I make these two lines right here? There's a reason why I made these two lines. It's not something on the 4 hours. It was something that I made on the 5 and the 15-minute. Okay. Here's the thing. This is what I did today. So how did I know to go buy Tesla calls at that breakout level? Right? Where was the breakout level, guys? At what time did I call Tesla? 6:54. So looking at the 1-minute chart, I called Tesla at 6:54, right over here. Now, going back to the 5 minutes, right? This is what you need to do. So what I did was, right, I took the resistance levels and I made a line that lined up with the tops. So one right here, right? Because you have it tested right here, tested right here, tested right. You get the point, right? I don't need to freaking do all these ovals. And then I made another one for the top, for this one. And this one, I made it so that it stretched out, so that it touched what? So that it hit the pre-market level. Okay? So that it hit the pre-market level. Now I have this space in between. What does this space in between indicate for me? Right? Hold on, let me delete this. The space in between, right? This lets me know if the supply is there, right? Boom. That's the fucking answer right there. If the supply is there, right? Now, if the supply is there, buyers will come in from about here, right? Now, at what point did I signal the trade? I signaled as soon as we broke out of this. As soon as it broke out of these two lines, right? Right here. So I signaled it about here. As soon as it broke the two lines, I signaled it, and then boom, right? Went into a bull flag, didn't even hit our stop loss at all. Didn't even really go down below our entry like that. And then we capitalized off this for 5 minutes. Okay. Obviously, could I have traded the bottom? Could I have traded the bottom and try to trade the reversal? Yeah, but that's a lot of risk to take, because there was nothing showing you, if you're looking at it from a point where you only trade candlesticks, right? There was no candlestick to tell you that, hey, this was going to reverse, right? What I do is, right? Remember what I showed you earlier, the two combinations. I use the stochastics, and then I use the EMA. You had two crossovers happening right here at the same time. So A, B, C. What is C? C is the breakout of the pattern that I have drawn out. A, B, C. Next, D-Dog. D-Dog slowed down as soon as the fucking market started slowing down. But D-Dog, I was looking at this on D-Dog. So on D-Dog, on the 4 hours, I was looking at the 4-hour level, right? And it was showing me this pennant right here. So it's kind of telling me that, hey, the buyers are here and we might end up, this is a good swing to take, for example, like to the upside, in my opinion, because, we still have room to go here. And then obviously we have room to go here and then here, right? But on the 5 minutes, if you look at D-Dog, right? At what point did I signal the trade? At D-Dog, 722. So at 722, I signaled the trade. So if we go here on the 1 minute, where's 722? Right over here. So I signaled the trade right over here. Okay, I signaled right there. And if you look on the 5 minutes, why did I signal it right there? Because we also just had a crossover here. We had a crossover. We had a breakout right here. And we also have our momentum indicator that's already up. Now, here's the thing. You can do this lots of different ways, right? You can, for example, you can look at this crossover here and try to trade it. But like I said, right, with me, I want to make sure the moving averages are crossing after, we get a crossover on the stochastic side of things, right? You have to look at the red line. You have to look at when the red line crosses the pink line. Make sense? So red over the pink or red over the pink to the upside or red over the pink on the downside. Okay. Now, this was a 25% trade at the top. And then the market started to slow down. Obviously, D-Dog followed. Couldn't hold up its own weight. Lucid was basically break even or like a loss for like 10%. But Lucid, I signaled it right here. Simple trade. So if you look at Lucid, obviously, look at the 15 minutes. You had a what? What is this called? It's like a range / channel / ascending triangle, right? It turns into a ascending triangle if you were to just go like this, whatever, right? Now, let's say, right? Because remember, I ended the day at like 9 a.m. So let's say you had this pattern drawn out, right? You had a pattern. You got to always draw your pattern. You always draw it out, right? Now, whatever, cool. We took the L or you broke even. Now, what if you saw it come down right over here? What do I have here? I have A, B, C. I have the stochastics telling me it's slowing down. I have the EMAs crossing over, and I have the breakout of the pattern. So from 27 to 26 could have been a nice 90, 80% trade. Make sense? Okay. What's next? How many of you guys are enjoying the class? Like, dude, I'm telling you how I trade. This is literally what I do now. And this is the thing. I don't care to show you this because at the end of the day, what did I say? 400 of you will take it and do good with it. The rest, it's all up here. I'm pointing at my head, right? Pointing at my brain. It's all up here, right? What is next? Okay, next, Apple puts. Apple puts at 7:54 a.m. So 7:54 a.m. was right about here. Why did I signal Apple puts right here? Looking at the 5 minutes, what did we have? So on the 5 minutes, here's the thing. On the 15. On the 5, we had a potential flag happening, right? We had a potential flag happening right here, right? Bump up right there. Now, it was testing, but what did we get? We had a crossover on the moving average, right? We had a crossover on the moving average. Before that, we had a crossover on the stochastics. So what happens first? So the stochastics happens first, meaning what do you need to look for first within the chart? What has to slow down or what has to speed up first? Don't say stochastic. What does the stochastic tell you though? The momentum has to shift first, right? So the momentum has to shift from it being bullish to it being bearish. So once the momentum shifts, you get the crossover. Once the crossover happens, if there is a pattern, you trade the breakout of that pattern. Boom, to the downside, right? That was a good freaking 5, 10. And guess what? At the same time as Apple, right, at 7:55, 7:55, it's right here. Right? So one thing that you need to understand at 7:55, this was a, what is this? This level 3344 is what? Was a support level, right? One thing about me that you need to know, I usually like to take trades before they break out the support. So I entered it before it broke out, assuming that it was going to break out. Right? Now, what did we have here? We had a pattern, right? Now, if you look at the 5 minutes, we also had a pattern right here too. If you want to get technical with it, you had multiple patterns happening at the same time, right? Now, on the 15 minutes right here, 7:30, it was already clear. And this is why to me, when you look at multiple time frames, it's important to be able to look at different time frames. Okay, it's very important to do that. So on the 15 minutes, I was already looking, and it was already trying to break out of the bear flag on the 15 minutes, right? But there's a bigger pattern here going into play, which is this one, right? So I traded the breakout of that support. So I could have traded the breakout of this, but instead I waited to trade the breakout of this. Why is that? I missed out on a whole $20 just to make a trade. Because I could have entered here, right? We could have. But you guys gotta understand, look at the support that's being made on that 33, on that level right there. I'm not gonna risk, I'm not gonna risk this much space right there just to make a trade that I'm not sure about, right? So confirmation is the answer. I waited for confirmation, which was that candle right there and this piercing candle, and then we entered the trade. But the EMAs did not cross. Okay, good observation. The EMAs didn't cross, but the EMAs did what? And like I said earlier, right? There are multiple ways to trade, right? The ABC setup won't happen every single time you look for something to trade. You can wait, but you don't have to. Here's the thing. I was looking at Apple first, and then I looked at Amazon, and then I looked at the overall market. So the overall market was already looking bearish, right? It was already looking bearish. And then, so what do? So you can assume that all these big names, because remember, all these big names are tied together, right? All these big names are tied together. If one moves, the other one usually will move the same way, right? So if you're looking at Apple and it's bearish and you're trying to enter a trade and you're like, oh, this is a bearish, I'm entering this because it's giving me ABC, whatever. Now you look at Amazon, if you're looking at the supply and demand aspect of it and it's showing you that it can potentially go down, then there's nothing wrong with you entering that trade as long as it makes sense to you. How did it make sense to me to trade this? Broke out of the support level right here, boom, going down, whatever. What's next? Microsoft at 758. Now, Microsoft was a little iffy for me because, and this is why it took me a while to signal that, because this was the pattern that it had, right? This was the pattern that it had. Now, at 7 o'clock, you know, we had a big pump at this level. So for me, and at 758 it was like about here, I signaled it like about here, right? Now, it's kind of 758 is right here. It was kind of hard for me to signal this, and I only signaled it because it was cheap, right? But at the same time, it was hard for me to signal this because this is the pattern I'm looking at. And if I'm, you know, let's say if I'm entering the trade right here, do I have that much room to go to the downside? Not really, not really, but I signaled it anyways, right? Because I don't know why I did, but I did. Now, how do we find out? How do we find out where you find, like, you know, your profit targets, or like, how do you find, okay, if I enter the trade at 100, how do I know to get out at 103 or 102 or 101.5 or 101 or 100.5? How do I know, right? Now, this is where you have to be able to make your support and resistance levels. This is, you know, right here. These are all my levels. So if I clear this out, right, you got to start. First of all, you want to start from the weekly, right? You want to look at the wicks at the top, and then you want to move your way down to, I don't have to look at this one on the bottom because we're never going to get back down here. You know, you don't need to waste your time looking at these ones on the left side. So I just look at, you know, right here, up here, and then you make another support right there. Why am I having a support right there? Because you have multiple wicks touching the same area, and then you work your way. This is the weekly, so I'm looking at least two touches of the wicks. One touch is okay. Then you move on to the daily. And you look for 2-3 touches. Now, look, for those of you who don't know, what is that? What do I mean by 2-3 touches? Now, look at this. If I just look at this area, boom, it touched 1, 2, 3, 4 different times, right? 4 different times over here. Did it retest again after this? Yes or no? Touched here, 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 here. So remember, support and resistance will always retest themselves in the future sometime, because these are levels where buyers and sellers come in. And if you're looking at big banks, big institutions, what do they use? They use what? Starts with an A, algorithms to trade, right? So these algos will get triggered at certain levels. That's why that's why support and resistance is so important to me when I try to tell you guys, you know, when I try to teach you guys how to do this shit. Now, after the daily, you move on to the 4 hours, right? You see if you missed anything on the 4 hours. So like, I'll have one here. Oh shit, my bad. I'll change the color. Now, some of you are like, dude, I can't even see the chart anymore. Like, you're drawing too many lines. Am I drawing too many lines? No, because when you jump into the 5 minutes now, you have clear entry and exit levels. Right? Now, what is the difference between the orange line and the purple line? Now, for the purple line, it means these are weekly and daily resistance levels. And then if I'm looking at the orange line, this means these are what? 4-hour levels, which are, so the reason why so 4-hour hourly, so 4-hour hourly, I use a different color. I use the same color. Daily, weekly, I use the same color. And then on the 5, 10, 15 minute, I use the same color. So if I'm moving to the 15 minutes, like right here, right, I'll use another color, for example. And also this lets me know that this is a 15-minute level, 15-minute level, or 15, 5 or whatever, right? Now, how, like, why do they matter when I'm entering trades? Now, with the 15-minute, 5-minute levels, right, it lets me scalp trades. For my orange ones, it lets me hold day trades. It lets me know that, okay, well, this is the next level right here, so I'm going to hold the day trade. Now, if you're looking at a purple, for example, right here, right? Let's say this. So you're looking at Microsoft. Let's say you bought calls right here, right? Now, essentially, if you bought calls, if this is your daily resistance and this is your 15-minute resistance, which one are you going to trust more? You're going to trust the daily level better. So what is that allowing you to do now? So now you can hold the trade longer and make more money and not get scared at this little resistance level. It allows me to see things better from a better perspective, and it lets me hold on to trades longer than I should be. So yeah, hopefully that helped you guys. So daily, my bad, daily, weekly. So weekly and daily. So weekly, it's okay to just have one touch of the wick. Why is it okay? Because if you're looking at a weekly, how many candles does it take for a weekly? If you're looking at a daily, how many weekly candles is that? I mean, how many daily candles happen on one weekly candle? There's 5 different candles that make up one single weekly candle. So if I'm looking at the weekly, right, it's gonna look like this. Don't worry about it. If I'm looking at one single candle, this is 5 different candles on a daily perspective, right? So I'll use, like for example, look at this. So this is so you see this wick right here. I'll make one here, then I'll make one here. That's what I mean by it's okay to just use one. Okay, if you guys enjoyed today's class, please tag me, take a picture, take a nice little photo of this. And I hope I helped you guys, because I took my time and I tried to dumb it down. Like I tried to explain it the best that I could. I use layman's terms. I didn't go over here telling you freaking some crazy shit that a lot of people use, but I just, I figured not a lot of people here are on the same page. So I try to make sure you guys are on the same page. So I hope you guys are all on the same page. And if you have any questions, fuck, you can't even reach out to me. If you have any questions, just tag me on Twitter. I don't know. But hopefully this helped you guys. I would love, all I ask is if you just tag me and repost me on your Instagram or Twitter. That's it. Hopefully you guys kill it tomorrow. And make sure tonight, right? Make sure tonight you guys spend at least like an hour and just look at this, right? Just try to, if you don't know, if this confused you, it's okay, because it confused me too, right? So practice makes perfect in my eyes. Kevin, can I eat your butt? No. What the hell? What's wrong with you guys?